Now let's continue our conversation. Stephen Lee is joining us right now, principal of Logan Capital. Thank you for being with us. Your thoughts on the market at this point? We're heading into the end of the year. We have, 5 weeks, not even, left of trading. How do you feel here?
We've been fairly constructive on the opportunity in the market all year. The big backstory, I think a lot of this has been the consumer has proven to be much more resilient. You had all that stimulus that was put in place to support, the transition through COVID. And that resulted in a consumer with good balance sheets. Corporate balance sheets are in pretty good shape. So despite the challenges, there was foundation here for a resumption of spending, which certainly happened. We've seen investors throughout the year, as you mentioned, this month has been a very solid month. But what we're seeing investors do is acknowledge companies that can perform, that have pricing power, that have good, steady customers. They're able to deal with the inflation, deal with the things that are out there, execute and do well. And we think there's some nice foundation going forward as well.
So if you think, do you believe a soft landing is possible and putting money to work and such? What would you do in that event? Is that sort of the event you see playing out?
We've been a little less worried about recession than some. So we think that certainly maybe later next year. But, the resiliency in employment and the productivity, that all the technology we've been talking about, early in the year it was who's going to provide all the tools for artificial intelligence. But what we've seen recently is companies are using that to drive earnings and deliver results. And we think it shifts. We think there's opportunity shifting from the providers of technology to the users of technology. And if you look at this month, some of the retailers that have used that technology to really know their customers well, meet them where they are, be it physically, online, get the right inventory. We think there's good foundation there. And the other thing is you've got the millennials and they've aged up to household formations. And even though interest rates have gone up and mortgage rates have gone up, there's the demand of just they're in household formation years. You had the wedding boost a couple of years ago, right? And now, families and, they need homes, and the U.S. is underbuilt. And building new homes is very constructive for the U.S. economy. And as we're seeing, existing homeowners are really perfectly happy to stay where they are and enjoy the benefits of those mortgage rates they locked in years ago.
I see. So at this point now, you seem a little more optimistic rather than worrying about a recession and such. When you look at the housing market, and folks have to pay more, we know that they've dealt with very high inflation. I was reading everything that they're paying for home, which home prices are still high. Insurance is high, and that's another element. So what would you like to see ideally in the housing market? In your ideal world, what would you like to see happen here? And could it happen?
Well, I think it was interesting. You saw with Home Depot and Lowe's where the do-it-yourself, the renovation side of the market's really slowed down a bit. We're going to need to do some new construction. And, if you look at over time, when rates go up, the new houses are a little smaller, a little more affordable. And, we think that continues, but they're still needed. We're just so underbuilt. And even if we have a uptick on unemployment, we're still at pretty good levels for unemployment. The job market seems to be pretty stable. And the other thing is the flexibility of technology. People can work part-time more easily. They can be engaged with the workforce a little bit more than was possible 4 to 5 years ago. That's going to be a side benefit of all the things that we went through the last several years. Just working and being engaged in the economy is a lot easier, and there's just so much more flexibility there. So we think, there's a case to play through here.
Yeah, and it sounds like, I don't want to say this with a broad brush, so you tell me, do you like things that are like these home improvement names? Do you like Lowe's and Home Depot? You mentioned technology. Do you like the Magnificent Seven? Are these areas that you feel could drive things going forward?
Yeah, I think the Magnificent Seven really had, if you remember last year, they had a tough year. Right. So they came into this year really oversold, and they did exactly what we're talking about. They executed, they delivered good results. This quarter has been a little bit more, to get something you're asking, maybe a Williams-Sonoma. Good branded products, good pricing power, a company that's really invested in the digital infrastructure. So if somebody wants to go see what the furniture looks like, but then have it in 2 weeks, they can fulfill that. There's a lot of expense that went into being able to do that. That's going to be a big competitive advantage. So I think what we're telling clients is, Yeah, all the macro things are kind of the forest, but this is more of a trees market. What companies are able to be nimble, invest, and continue to play through. And these are periods where leadership changes. Our team's been working together for 30 years, and it happened after 1999, where all the investment in e-commerce changed what retailers really were advantaged. Happened again after '08. After big inflection points, leadership changes and it becomes about execution. So we're going company by company. Who has the resources to deliver, and have they made the investments? I was listening to a call this morning into it, and they'd spent the last 10 years investing in artificial intelligence and are offering that to their clients, their small business clients, as a way to run their businesses better. So we think there's a ton of opportunities, even if the economy is a little slower, for companies that are light on their feet to do incredibly well in this environment.
So as you say AI, I mean, NVIDIA is part of the Magnificent Seven,
Right.
but what other names would you recommend NVIDIA, or do you feel like it's too frothy, or do you like a lot of the AI related names overall?
I think the users, Meta has done a good job of using that. If you remember last year, they're delivering ads and kind of working around the privacy concerns. Adobe has done very well in terms of using AI to deliver. Again, the retailers knowing their customers. So there are a lot of companies that are just running. They know their customers. They have their data. The trick with AI is it's only as good as the data you have. So we're looking for companies that really have all that information about their customers that can learn from it. You had hallucinating with that chat GPT. It would hallucinate because it was just surfing the web, and not everything out there is right. So it's not just the tech and the providers, but do you have the right information? Can you act on it? So it's really pay attention. Who has that data?
Stephen Lee, Logan Capital, thank you so much. Good to see you.
Thank you. Good seeing you.